Good afternoon, traders and investors. Welcome to the closing print on this Thursday rally afternoon. S&P 500 index futures poised to post a new closing high for the move. That was way down at 53.75. That was 7 long days ago. Important level we've hit on the upside. Wednesday's high 41.77.75. Who thunk we would have seen that today? The current high 76.75. So little bears making the only stand they can at yesterday's high. If we get through that, we have an intraday high. That's coming on from February 16th, folks. So we've come all the way back from February 16th, all the way back ahead, going into the big bank earnings day. In just a few minutes, we will be joined by Nate Tobik of CompleteBankData.com at Oddball Stocks, and he will preview those earnings which are going to determine the next move in the markets. Well, we got the high, the low. We looked at the S&P. The buck is under pressure again. Let's not forget, folks, this is a little bit different than the morning show. The daily chart is in the lower right because of the Zoom guy, that handsome guy on Zoom that I can't move. The next support level, let's go to the next support level here in the dollar index futures. That comes down to 100.295. 40 cents away, 50 cents away. So we'll take a look into see if we can get there. Still kind of hanging out above the low, above that February low. The bonds have taken a little bit turn for the worse. They've been all over the map, but they're down 11/30 and 131 and 26/30. Crude, new high for the rebound, folks. I'm going to get rid of this line because you know what? I might keep it up there, but I'll cheat. I'll move it up to here. And I'll say that this high, pair of highs again, 83.53, 83.44. Do we want me to call another top in this rally in the crude oil market? Gold is where you got to be, folks. Gold that glitters up 29.10 at 20.54. New high of the move by over or just under $20. New closing high by about $21. So gold, silver, that's watch out your bids, folks. We're falling a little bit off that double top there, so be careful going into the close. Watch your bids. Watch your bids. Move your sell stops up a little bit if you want to lock in some gains here in the final 27 minutes of the session. Crew or silver, we did sneak into the 26 handle. We didn't. We're not there now. Up 51 cents at 25.97. Bitcoin, that's having a good day. And boom, boom, boom. Boom, boom, boom. All right. So that's what we got. We got questions, we got answers, we got things pouring in here. And let me go to the stock chart because you guys are stock people. We'll go to Apple, just a steady march, just like the S&P's higher. Let's adjust this chart. Boom. Let's adjust this chart. Boom. And Apple, did Apple finally return to the promised land here? No, not quite. Still got some more meat on the bone for the high of the move in Apple. That was 66.29. The high close was right up there too. But let's go. Let's go back and look at a few things from this morning. And boy, EKI, Chevron, BP, interesting deals. We can go back and look at that. Boom, boom. Let's look at Western Digital. I mean, what do we have another activist now? Western Digital down again. Maybe get a gap fill in this one. This thing has been just no good. You got to get down to 35.41. Maybe set your alert if you get down to that area. Maybe get a gap fill, take a look, but give it back 2 days gains. Not going well with the market here. And let me move up. I got to go back. Let's talk about Fastenal. Fastenal, we'll talk about that from two different points. It battled its way back, the nuts and bolts of the economy. As you can see, we never got to those pre-market levels, right? Pre-market low was under 50.50. You begun the regular session. And how do we do in Fastenal here? We didn't quite fill the gap. Opened 50.88, 50.30. Now, what was the pre-market low? Did it get to the pre-market low? Missed the pre-market low by 2 pennies, off to the races. Not quite filling the gap yet, but why not? Why the heck not? Only missed it by 3 cents. You know what? That's good enough, a gap fill for me. Good question from Larry Washington Jr. Joel, on today's pre-market prep show, Dennis said that he was getting a buck and a half lead on Fastenal. Was that based on the closing price from yesterday or something else? Larry, you answered your own question. Okay. Look at the bottom right here. Look at the dailies. The dailies, you had a closing price yesterday. Was that a double close? Yeah, good enough for me. Double close, 52.56, 52.66. So what Dennis was talking about here is someone thought there was going to be a real good report, right? So this is after this bar right here. Not everyone is trading. Actually, that was right before Dennis. You know, Dennis works until 8 o'clock at night. Do you know he works that hard preparing for you guys for the show? Well, he's also trading, but that's where he got the buck and a half lead. He knew the earnings were in the morning. So what he said was, hey, they're real, it was not a great day in the market. They're really going to have to blow it away. Fastenal is not a stock that typically is going to move 10, 12, 15 bucks. So, he's not going to get totally destroyed on it. So he took the lead. He was looking for the print. He had, and the closing price, and it's a calculated guess. So does that? You answered your own question. Boom. Okay. So let's go on here, Larry. I hope that app is saying. On Kit Patel, I noticed that too. Sneaky move in Amazon. I was actually looking at the top components here, and I thought Tesla was it. Then I looked at that Amazon. Amazon's got a lot of catching up to do. Good day in Amazon. Good day. I mean, this stock moves with the market. Open higher. You got to get in early. You would have had to just plug your nose and buy it. It got to, we mentioned the 101 area, 100.75, pushed up to 102.57. Couple other highs in that area. Next daily high comes in at 103.91. So that is a look at Amazon. You are correct. That's having a good day. Still, if you look at the monthly here, this one has still been the laggard compared to the other mega. This has been the laggard. Google's been the laggard, and I'm just talking about an overall, 50% retracement, of the moves. And that just hasn't done it yet. What else do we have to go through here? Boom, boom, boom. You bought the dip yesterday in Amazon. Do we sell the banks and the airlines? Well, we're going to find out about the banks here momentarily when we bring on Nate Tobik. He's the founder of CompleteBankData.com. I think he even has a book out called that, and he's a great follow on Oddball Stocks. We've been following banks with him forever. I just wanted to see what else I got in here. We're probably the only people that talk about gray television, and it held that $8 level. More important for your gray television holders, you got to clear 875. That's a pair of highs from Tuesday and Wednesday. That's for gray television. And what else do we do? Boom. Mike Stanley, really don't care about him. So that's it. You know what I'm going to do? I'm going to stop the screen share here, and you're going to see Nate Tobik. Hey, Nate, it's Joel in the closing print crew. How you doing?
Good. Doing very well. Yourself?
Good. Okay. So before we get to the bank data and the bank earnings, I gotta ask you a question, and I got a prediction.
Sure.
Okay. You said your son ran track at a track
Yep.
meet yesterday,
Yes.
right? Before I ask you how he did, is he a distance runner?
He is. Yep. Good guess. So oldest is distance, and then the second oldest is he's more like a quarter mile, half miler.
Okay.
Speedy guy.
How
Yep.
how old are they?
So I've got four boys. The oldest is in 7th grade, and second oldest is in 5th grade.
Okay. Do you know how I knew that?
No, guess. How?
No, no, because even though I've never met you in person, you seem like a pretty tall. How tall are you?
6'2".
Yeah, and
Yep.
I think you're kind of thin. So from what I
That's
can
right.
see, yep,
Yep.
and you were probably a track runner.
I did.
Oh my
Yep.
God.
Yep.
Should I just open up like a palm reading station
This is, yeah.
instead of doing this market stuff?
It's the same sort of level of prediction. I mean, that's it. You piece a couple things together and then you got the answer. That's what you do in the markets. That's exactly
Okay.
right. Yep.
Okay. So first let's go back. We had you on a couple weeks ago,
Yep.
right in the middle of the contagion.
Yes.
And
Yep.
you said, don't worry.
Yeah.
You
It
said your money's
it's
safe.
it's worked out so far. So what's happening now is there is the haves and the have-nots, and so the haves are, I think we're going to see from the big banks, J.P. Morgan, Bank of America. I think money is rolling in the door to them like crazy, and there's going to be a lot of cheap deposits that they could put to work. So that's huge for them. Regional banks, some of them a similar story, and then when you get into the banks where they're not answering the phone, I think that their deposits have left to go to JP Morgan.
What banks aren't answering their phone?
That's a lot of it is it's really anyone. So if you look, a lot of these banks, they went way out on the curve last couple of years, and so their effective yield, if you look through like their call reports and or their quarterly filings, if their effective yield in their portfolio is around 4%, they're having to pay that right now, and so they're going to be upside down real quick. And the reason this is a problem for smaller banks and not the bigger ones is that they don't have a diversified portfolio. So if you've got a smaller bank that's in a lot of residential or more fixed rate stuff, they're hurting bad. If you've got banks that are doing so commercial operating lines are fine. Those things float. Commercial real estate is another story. So in some areas of the country, primarily the South, Texas, parts of the West, real estate's fine. Everyone's back in the office. It's like nothing ever happened with COVID. If you're in Manhattan, along the East Coast, Northeast, California, it's not a good story for commercial real estate. So banks that are heavy into commercial real estate in those markets, they have a lot of exposure to, like a lot of these REITs. They're actually, it's like, hey, we'll just give you the building back. You could take it. We don't want
Yeah.
it. And so that sort of exposure is bad, but commercial exposure in terms of operating lines to industry to even retail is totally fine. And those things reset on a regular basis. So as rates go up, the interest rates are going up on those and they're floating with the market. So paying 3.5%, 4% on a CD, or having to pay to keep depositors from walking away, that's not a huge deal. They could weather that. Someone who is just stuck in a bunch of mortgages at 3%, they're going to be upside down soon. And that's primarily smaller banks that reached for yield because they
So
didn't know what to
yeah,
do.
yes. Well, two things here. Number one, I mean, what do you do if you were some of those banks back then? I mean, you have the excess capital in here. I don't know what loan demand was. I mean, I don't know SVB and SI. I mean, those are different stories, but I mean, can you say, well, 1.5, 2% is better than nothing? I mean, what?
That's what a lot of them said. And the problem was, it wasn't that 1.5 to 2% was better than nothing. It was 1.5% at 15 years. And that's the problem. So if you look at some of these where they did buy yield, but it's either structured kind of spread out evenly or it's closer dated, that's okay. They'll be fine with that. It's a lot of banks who just got bad advice, who went long a lot of these things. And it's kind of so these things go in cycles, right? So bank stocks, they get hit, you buy the survivors, and then you do well because eventually investors pour into that market. And when it comes to smaller banks, the time to buy is when these things are at like 50% of book value. Well, the problem was all these banks trading at 50% of book about a year or two ago, those are the ones who got their legs cut out from underneath them. So it's like there was no hope. And it's funny because now they're trading at book or more, but their stock price hasn't changed. So you know they're in trouble.
They could have thrown some hedges on, though, right? I mean,
Yes, they absolutely should have. And I think the reason they didn't was because people had been lulled to sleep by low rates for so long. It was, we'll never see rates rise. And then the narrative was like, hey, if they rise a little bit, they'll just go straight back to zero. And people are starting to realize like maybe that's just not going to be the case.
you think we're ever going back to those low rates again?
I don't know. I don't think so. I mean, who knows? Never say never. So maybe, but the more screaming I see for people going to zero is it. So here's my opinion on this. There's a tech crash. So if you're in tech and you're exposed to that, a lot of those companies, there's layoffs, demand is waning. Apple, whatever they said, 40% lower computer shipments or something a day ago. So that's bad. If you go out to the regular economy, things are still seemingly fine. That there was not that overinvestment and that euphoria. And a lot of the shortages from COVID actually prevented these companies from growing as fast as they could have. So in a sense, they were kind of held back. And now they're in an okay spot right now. Whereas a lot of these tech companies with 0% rates, they went nuts and they're kind of getting pulled back. And so I think everyone who wants the 0% rates is, if I had to guess, kind of like the distance running. It's they're a tech heavy portfolio. They're all in tech. Everyone else who had a kind of a diversified portfolio or they're exposed to different sectors, they're not really looking for zero rates. I mean, people have done perfectly fine without it so far, and we'll just see. So never say never, but I think things are going to stabilize, above zero.
Okay, you already alluded to it a little bit, but we got a direct question about the small community banks here. So I'm gonna go to the screen share here, and
Sure.
let's just give me a couple small community banks here to take a look at that are on your radar, either positive or negative, and then we'll preview the big banks. What
Sure,
about
sure.
what
Yeah, I
about?
mean, so like, so some of these guys that have been hit, if you look at like Somerset Trust, I think it's like SOME, maybe. Um,
Mm, yeah, you got it. Yep.
Very good. Yeah, it doesn't even move. Their book value shrunk significantly. I'm trying to think. I just got one in the mail. Oh, Mars Community Bank. They lost 2/3 of book value in their
What's that
most
symbol?
recent.
Do you know?
Uh,
Oh, that's okay. It
yeah, I have to pull that
What
up.
about one that trades a little bit of volume?
So I mean, I actually like so FNB. This is That's First National Bank of Pennsylvania. It's a small regional bank, I guess is what you could say.
Hmm.
And they're still kind of hanging in there. You could look also at this is kind of this is a never trades, but it trades for a couple $1,000s a share. Is Farmers and Merchants of Long Beach, and it's FMBL is the ticker. Fumble. They did fumble a little bit. So look at the wild ride on this one. So you're at 8,000 down to 6,000, back up and back down. This
What
is
is what's the crazy one that went all the way back up and it's really high priced too?
well. So
FCNY.
First Republic was
Yeah,
it?
no. That
No.
hasn't come back, and I know that hasn't come back because I got tanned in that one. Um, FC, help me out, chat. Come on, get off your computers. FCNA or
Oh,
FCNCY. Come on, man. They bought they got the assets of SIVB, I believe.
Oh yeah, yeah, yeah. First Citizens FCN. So FCNCA maybe.
I think you're right.
Yeah, that
Uh,
so those guys are interesting, and that's a stock worth watching because they took the best of SVB and they've really grown from a tiny little North Carolina bank. I think they're North Carolina. Now it's nationwide, and they've sort of assembled this portfolio in a way that no one really expected. So if they're able to do well with it, this is potentially a franchise to ride for a while.
okay. What about okay? I dipped my toe in FRC and my toe got burnt. Any comments on FRC?
I so I think the last I saw, they're worth less than zero, and that's why they haven't really sold. Nothing's really happened to them. So it's sort of a zombie bank, just kind of plugging along. Um, Deposits left, their securities aren't worth as much, and they're just kind of in place. And I think there will be a number of these because, so once book value's gone, no one's going to buy it because they would have to mark everything at market when they make the purchase. So it's just easier to
Oh, you
run as a
lose.
zombie
You
bank,
lose.
hoping things
Yep.
turn around one day.
Okay. What about I did dip my toe in Key Bank. How am I doing in
Yep.
Key Bank? I bought the dip in that one. Am I going to be okay?
I think KeyBank's fine. Yeah, one of the regionals. Yeah, I
What
mean,
about
so
Go ahead. Go ahead with Key
no,
Bank.
what were you going to say? Yeah.
I was just going to ask you about Comerica along with that.
Which one?
Comerica.
Oh, Comerica. Yeah, I looked at them. Same thing. I think they're roughly in the same. This a lot of these are in the same bucket. So Comerica, FNB, KeyBank, they're all about the same. And the big risk for these banks is if there's some sort of if they're what if when whenever we finally get a recession, that's when they're going to start to feel the pain. And so because they have exposure to those, what I would call the real economy in those markets.
Okay. All right. Let's go. Let's go to the ones for tomorrow. PNC.
Yeah. So I think PNC is going to do pretty well. I don't, in terms of beat, I don't know what the expectations are. I don't think they've had the same deposit outflow that we've seen at others. So, this is total speculation. This is the big name in town here, and I haven't seen people panicked, working late hours yet. So, anecdotally, I'm going to say I think things are status quo there, we could say.
JP Morgan. Getting those cheap deposits, which they will be able to redeploy.
I think
Just
they're going to do
quiet.
well. Yeah,
Okay.
JP
Well,
Morgan. I think JP Morgan, Bank of America, I think those are going to be the winners. I'm really not a huge fan of Citibank and
okay.
Wells Fargo. I mean, so I think what killed them was opening all those accounts. They destroyed their reputation, and now when you need a safe haven, it's not going there.
Okay. Where do you throw BlackRock in there? BLK. People ask about it all the time. I mean, it's not a bank, it's more of a financial institution. Is that something in your area of coverage?
I mean, I follow them here and there, not the same as a bank.
Okay. All right. Let's see, is there any other banks here? Chat. If Do I miss any banks for Nate here before I let him go? I'm looking in. Oh, Ally.
Oh, that's a good one. I, they really pushed with a lot of the online products, and they from how they were operating a couple years ago, I think they could be a winner out of this.
Okay. Okay. All right. Well, great rundown on the bank earnings. What a great day to have Nate Tobik on. He's a great follow at Oddball Stocks. He also wrote a book, CompleteBankData.com, and you could get, or what is that the name of the book? What's the name of your
No,
book?
it's Bank Investors Handbook. I have a copy around here somewhere.
Okay, and how can our investors get a hold of that book?
Just go to Amazon. It's on
Amazon.
Amazon.
Yep.
Yep.
Okay. All right. You're getting some love here in the chat. Thank you. Great info. Know how to get a hold of you now. So good luck with the four boys there. You
All
won't.
right.
Well, in the old days, I would say you wouldn't have to pay for any weddings, but in
I
this
I
new
don't
world,
think that's true anymore. I
it's
was hoping that for a while, but yeah, it's I've heard too many stories to the contrary, and it's like, well, uh, we'll see. Yeah.
okay. All right, Nate. A pleasure as always. We'll be dialing you up soon. And oh, one more. Let me sneak in one more here.
Sure.
PACW. PACW.
PACW. I'm not sure I know that one.
Pac West Corp.
Oh, Pac West. I know the name, but I just
Okay.
really haven't followed them. So yeah.
Okay. We're going to let you skedaddle out of here. And good luck at those track meets. Nate
All right.
Tobik,
Thank you so much.
Oddball Stocks, CompleteBankData.com. All right. Nate's going to sign out here. We
Thanks.
did we did get a little double top. Me with my double tops and triple tops. So yesterday's high 41.77. Yesterday's high, the Globex high, the high between 9:38 between the 24-hour market, 41.77 yet today, 41.77.75 tomorrow. We looks like, unless we completely become unraveled here, we're going to be posting a new closing high for the move by a nice margin. That's going to be about 17 handles. That former closing high of the move, that was what it was. That was a 7-day close. It's going back. I like to go all the way back to 10 days with my data. Kevin Costello, what's my thoughts on PACW? Man, well, the monthly it just looks so quiet. It looks like it's either worth like 0 or 20. We'll have to see, how it comes out with the earnings, but I can't, it's just going to make you're going to wake up if you own it, you're going to wake up one day and it's going to be at $2, or they're going to come out with some good news and it's going to get back to the $20-24 area. So to me, out of all the stocks, this just looks like a coin flip. You see what happened on the 3-day move. The kind of the same thing with FRC. They're getting a little, that's the monthly there, just hanging out near the low. So just a quiet consolidation here. That's really all I can say on PACW. All right, so we're going to get ready for tomorrow morning. I want to see if I've missed any stocks here in the chat. NYCB, now that's something I've owned for 100 years when it was the old Flagstar Bank. That's how I got it. It did get hit. I did buy the dip in a little bit more on the dip on that one, but I had I don't even know what my cost basis is on that one. The girls will have to figure out that someday when their old man passes on, which hopefully isn't for a while. I just want to do a quick technical here. We have just about a minute left for you guys. For you guys going at this JP Morgan in the morning. It always plays both sides. So take a look at your straddle on this one. Figure out where the straddle is and play that accordingly. On the dailies, man, it's tight, man. 131 and a half. Above that, you could get a nice move on the upside. On the downside, I wouldn't want to see it below 126. I don't think I'm going to get all these in before 4 o'clock. PNC, street leaning short into the street here, made a new low for the move yesterday, but got a bounce. So a little bit of a reversal in that one. So if they beat, and this could maybe go back up. I see resistance, no clear resistance until the 130 area. Well, it looks like it's on my clock. It's 4, it's 3, it's 2, it's 1. It's 1. I guess my clock's a little fast. A little buying into the close. Oh, it showed up on my other window. I'll say 41.72 and a half. New closing high for the move by almost 20 handles. Folks, thanks for joining me. We got a special treat tomorrow. We're going to have Tim Seymour join us. Tell us about the cannabis conference and everything that he learned at that, and have him talk about Q1. And then you guys, along with me, will have to endure his hockey talk with Triple D. Everyone, thanks for joining me. Hit the like. If you're not a subscriber, shame on you. Back with you guys tomorrow morning.